Hello, and welcome to Virtual Investor Conferences. My name is Matt Lataplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Warpaint London PLC. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Sam Bazzini, Chief Executive Officer of Warpaint London PLC, which trades on the OTCQX Best Market under the symbol WPNTF and on the LSE under the symbol W7L. Welcome, Sam.
Thank you. Can we put the disclaimer up, please? Okay, so first of all, I'd like to just note the disclaimer here regarding any forward-looking statements. My name's Sam Bazzini, CEO and co-founder of Warpaint London PLC, and on my right is Neil Rodall, our CFO, who will be here to help me answer any sort of financial questions. So at Warpaint, we produce affordable, high-quality, on-trend colour cosmetics under several of our own brands, our lead brand being W7. We employ approximately 140 people worldwide. We have 177,000 square foot of warehouse and office space in the UK, as well as offices in the US, China and Hong Kong. And the office in the US in New York is a sales office, and the offices in China and Hong Kong are primarily for sourcing our products and for quality control and checking the factories. We outsource all our manufacturing and we use multiple factories. We find this by doing this ensures the best price, the best quality and the best service. And if we don't get the best price, the best quality or the best service, we can move factories very, very quickly. At Warpaint, we're profitable, we're cash generative, we've got a strong balance sheet, we're totally debt free, and we are dividend paying. Just the financial highlights for 2023. 2023 was a record year for us with sales of £89.6 million, 40% up on 2022. Gross profit margin also increased from 36.4% to 39.9%. And our PBT, our profit before tax, was £18.1 million against 7.7 million in 2022. At the end of 2023, we had no debt, we had cash in the bank of 9.1 million against 5.9 million in the previous year. And worth mentioning the proposed final dividend, which was 6p, bringing a total of 9 pence for the year against 7.1p for the previous year. Next slide. Just a trading update for 2024. I can only talk about the first quarter. Those are the only numbers out there. So strong trading continued into 2024 with record of 23.5 million revenues against 18.4 million in 2023, up 28%. Pleased to say the gross margin has continued to be strong and grow. The main driver is the resourcing of our products, where we will go to different factories and try and get a better price without compromising the quality, and also new product development. When we produce a new product, we start with a blank canvas, and we make sure that we get the right margin, the required margin. Expansion strategy continues. We've agreed an initial range of our W7 brand and Chit Chat brand to go into Walmart later this year. We've also launched another one of our brands, Technic, into 202 Morrison stores in the UK, which is a large supermarket chain. And as well as this, as well as launching into these new retail partners, we've also expanded into more CVS stores this year, more Boots, more Five Below, and we're going into more Superdrug stores in the UK later this year. And it's not just more stores, it's also more space in the stores that we're in. E-commerce also continues to grow. First quarter of 2024, we're 41% up on the same period as last year. And I'd like to point out that our e-commerce business is profitable. We don't try and produce revenue for the sake of revenue. Given the strong start to the year, we're confident that we can achieve our targets and we can grow the business this year and beyond. And our house broker, as well as Berenberg, have just put out, they've upgraded their forecast for Warpaint for 2024, and they expect revenues of 105 million with a PBT of 23 million plus. And we're very, very comfortable with this forecast. Strong value proposition. This slide really sums up what our lead brand W7 is all about. We're not trendsetters, we're followers of fashion. And our new product development department follow the prestige brands very, very closely. If anything interesting or innovative comes onto the market, we try and get the W7 version out within 3 to 6 months. And the W7 version will be both similar in look and quality. Quality is very, very important. You have to make a product that is fit for purpose. And these inspired products, or dupes as they're known in the trade, represent about 30% of what we do. The rest of what we do is core. It's a red lipstick, a red nail polish, a black mascara. But these 30% of dupes or inspired products are what creates the buzz and interest around the brand. And we find once people buy into the dupes, they start to buy into the core products. And if you look on this slide, you'll see some examples. I'll draw your attention to the Huda Beauty Eye Palette, made famous by a famous blogger, an influencer. It retails in the UK at £62. I don't know what that is in the US, maybe $80, I'm not sure. This is the prestige version. And then you've got the W7 version inspired by Huda called Socialite, similar in look and quality at £9.95. So less than 20% of the price. And when we see buyers, we use a slide like this along with samples to explain the whole concept of the brand. And it's always very, very well received. And once the product is on shelf, the consumer immediately understands the proposition. They understand the value they're getting and the look they're going to get. So it does make it an easy sale. This is some market data we purchased from Mintel, and it gives some good comparisons between the UK and the US and highlights the potential I believe we have in the US. So the first thing to look at is the size of the markets. The UK colour cosmetic market is 1.8 billion and the US is 18 billion. It's 10 times the size. In the UK last year, we did 33 million in revenue. So, you know, it should follow, if you do the math, that we should be able to do at least 330 million in the US. That's not a forecast, by the way. It's a hope. In the UK, 2/3 of women use colour cosmetics daily or a few times a week. In the US, the figure is identical. In the UK, 79% of people think price of a product is an important selection criteria. In the US, it's 68%. We're an affordable brand. We're in a cost of living crisis, so I feel we're well placed to take advantage of the current situation. And in the UK, 67% think affordable brands perform as well as prestige brands. In the US, it's even higher, it's 74%. We're a dupe brand. As I said, we make a good quality product. So again, we believe all this data tells us we meet all the criteria to be able to succeed in the US, the largest cosmetic market in the world. Our strategy, which is split up into 7 pillars, and I'll go through them. I'll go through them one by one. So the first thing is we focus on 5 brands. I've already mentioned W7, an affordable, young, on-trend colour cosmetic brand with a demographic of sort of 15 to 30-year-olds. We then have another brand called Technic, an affordable, everyday, essential cosmetic brand, services a wider demographic, less trend and fashion driven. We've then got a brand called Body Collection, which is more focused on an older demographic, on more premium packaging and skincare. Man Stuff, which is a men's cosmetic brand, which we really sell mainly at Christmas and Father's Day, is more of a gifting brand. And finally, we've got Chit Chat, a pre-teen colour cosmetic brand. We like to say where the fun begins. And all these brands do something different. We don't allow, they don't cannibalize each other. We also keep a very, very tight rein on the SKUs. We don't allow the amount of SKUs to proliferate out of control. And this is helping us to grow margin and profitability across the business. And we're also building, because we focus on these brands, brand equity in each and every one of them. Develop and nurture our current business. This is all about growing and protecting our existing customer base. There's no point in acquiring new customers like Tesco, Boots, CVS, Superdrug if we don't look after what we had. So we're very focused on looking after our current customer base. In the first quarter of this year, we were 28% up. And the lion's share of this growth was from our existing customer base. There were no major new customers, no massive pipe fills. It's just all organic existing business. Grow market share in the UK. This is what I like to call our 75% strategy. Our business originally grew up in the discount sector with the likes of B&M, TK Maxx, Savers. These are all discounters in the UK, and they only represent about 25% of the UK colour cosmetic business. This leaves 75% to go after the larger retailers, the likes of Tesco, Boots, Superdrug, Morrisons. And the first large retailer we landed was Tesco in 2020, just before COVID. We started off in 50 stores. We're now in over 1,400. And we've used all the success and learnings and the data that we get from the club card to open doors into other large retailers. Some of them are on this in the UK. Some of them are on the sheet, such as Boots and Asda and Superdrug, Morrisons, those type of retailers. And we've also used that data to help us open doors into some of the larger retailers in the US. Grow market share in the US and China. In the US, we've got a much tighter range. We use third-party logistics there. So we've got two of our best-selling hero lines. When you're losing third-party logistics, we don't want to have slow-moving stock there. Everything needs to be very, very fast-moving. In the US, like the UK, we target the larger retailers. In the last couple of years, we've opened up in Five Below, CVS, Kroger, HEB, and later on this year we'll be launching into Walmart. In China, we sell directly to the consumer online. We use platforms such as Tmall and Red and Taobao, Amazon equivalents. We manufacture our product in China. We register our products in China. As I mentioned earlier, we've got our own business in China. We've got boots on the ground that can monitor all this. Once we've manufactured the products, we send them to a fulfillment house, and we use a customer service company to promote the brand. And they use KOLs, key opinion leaders, and influencers to promote the brand. And the business is growing steadily and, more importantly, profitably. We're very focused on growing a profitable business here. Grow online sales profitably. In 2019, in fact, when we came to market in 2016, we really didn't have an online offering. Our website was really just used as a marketing tool. And we decided in 2019 we would focus on growing our e-commerce. In 2019, we had sales of 180,000. Last year, they were 200. In 2023, sales were £6.2 million. In the UK, we sell online and we sell on Amazon. And in the US and Europe, we use Amazon. We've got no infrastructure in the US and Europe, and we find Amazon is the best option for us. They operate something called Small and Light. And so we can ship our goods out very, very economically. Are we profitable? People often ask, can you be profitable on Amazon? We are. We get a similar PBT margin to the rest of the business, which is about 20%. Our gross margin is obviously higher. Could we grow our e-commerce faster? Yes, we could if we wanted to burn cash, if we wanted to sacrifice profit for growth, but that's really not what we want to do here. We want to grow. We've seen other online businesses, burn cash online, and it's very, very hard to get off that hamster wheel once you get on it. So we're focused on growing our online steadily and profitably. Finally, ESG, environmental social governance, something that's very, very important to our customers, consumers, and investors. So it's something we take very seriously. There's a number of things we're doing. We're reducing air travel. We're vegan and paraben free on all new products and reformulating any existing products as we reorder. We're reducing plastic packaging where possible, particularly on our gift. And we've been working with a company called Planet Mart since 2022. And we've put in place a strategy to reduce our carbon footprint and monitor our carbon footprint. These are some of the things we're doing. We're doing a lot more. All the details can be found on the Warpaint London PLC website. So I put this slide in. This is a question we're asked all the time. What is the opportunity within our existing customers? What is the possibility for growth? So I put in our three key areas, the UK, US, and Europe. In the UK, we have 20 key customers. We're currently in 6,100 stores. There's a total of 13,000 stores. So there's a potential to go into another 6,900. In the US, we've got 12 key customers, currently in 6,700 of those stores. Total of 24,200 stores gives us a potential of another 17,500 stores within the retailers we're already supplying. And in Europe, we have 9 key customers, currently in 2,300 stores, total of 7,200 stores with a potential of 4,900. If you add up all those doors that we're not in, it gives a potential of another 29,300 stores. Now, we wouldn't want to be in all those stores. For instance, there's 2,000 Boots in the UK. Some of them are small Boots. We're never going to get into there. They're really sort of local stores that more help with the pharmacy trade and the toiletry trade. But we reckon there's probably another 24 to 25,000 stores that we could grow into. And this is only our existing customer base. This doesn't include other target retailers such as Target in the US or Ulta or Walgreens or those type of retailers. Finally, the summary. Why invest in Warpaint? Record sales and profit in 2023, revenues of £89.5 million with 18 million in profit. We've got planned launches with new major retailers in 2024, as well as further growth within the retailers we're in. We've got a profitable and growing e-commerce strategy. And finally, for me, the most compelling reason to invest in Warpaint, this is a long-established business. We're profitable. We've got a strong balance sheet. We're dividend paying. We're cash generative, and we've got absolutely no debt, not even a photocopier on lease, I like to say. And that concludes the presentation. Are there any questions up there? When will the next trading update be? We've got our AGM next week, so there will be a very small trading update just to say where we are. It won't be very detailed. The next proper trading update will be our interims in September. Are you providing revenue projections for 2024? Well, I just mentioned it. We're not, but the brokers have. The brokers have, as I mentioned earlier, 105 million in revenues against 89.5 million last year, with a PBT of in excess of 23 million against sort of 18 million last year. So those are the projections. Can you speak to strategy of time? Can you speak of the strategy and timeline of greater penetration of the US market? I mean, this is something that's very much not in our control. We're continually talking to retailers. Last year, for example, we had 109. We went into 190 CVS stores at the beginning of 2023. They gave us, I believe, roughly another 379 that we just launched into. We're going into Walmart. Five Below, we've mentioned we're getting more space in there as they open more stores. But the timeline is we're talking to these retailers all the time. It seems to us wherever we're putting the product, it's selling, so we expect further penetration. But actually, the timeline is in the hands of the retailers, not us. Sorry. What is our biggest challenge? I suppose, like everyone else's, you want to keep growing, but we've got a very, very low base in the US. There's plenty of room for growth. As I mentioned earlier, just in the stores we're in, we believe we've got 3 or 4 years built-in growth, even if we don't get, even if we weren't to pick up another customer, which is unlikely. Who do I see as our major competitors in the UK and the US? I should imagine the obvious one would be someone like Elf, Revolution Beauty. In the UK, there's people like Barry M, Collection, those type of people, Maybelline. They're sort of all in our space. Are we employing any celebrity influence to build your brand? We did a little bit of that a few years ago. I believe it's not as relevant now as it was, unless you're going to start spending millions on TV advertising. I mean, I speak to the guys here. Actually, one of the ladies that worked for us, her brother is a Love Islander. And she said to me, actually, what the youngsters want now are people that are relevant. I think people have finally, I think the game's up for a lot of people, a lot of these big influencers. One day they're advertising cosmetics, the next day it's dog food, the day after that it's bottle of water, or they'll advertise anything. And I think people are moving away from that, and they want people that are more believable. So we do a little bit of it, but we're not spending lots of money on that. You mentioned, what am I looking at? You mentioned sales potential by entering new stores. What about growing sales inside the stores? Well, I suppose one good example, as we're going into these stores and the brand is performing well, we are growing inside the stores. So, for example, we were in 80 Boots stores with the 2-foot fixture. We've now got rollout into 180 stores, and the new fixtures are going to be 3 foot, and all the older fixtures are going to be turned into 3 foot. So we are growing within stores, and it's a similar story for Superdrug, and it was a similar story with CVS. We started off with a 2-foot fixture. We've now got a 3-foot fixture. So we are growing within the stores we're in. Milestones for the next 12 months. I'm not sure what they. Do you know what they're? Is that finance? I mean,
anything we can talk about.
Anything we can. I mean, the only thing we can talk about is a big target retailer for us is Walmart, and we're very, very excited to have opened an account with them and got a vendor number. It's a very, very, very similar sort of proposition, if you like, to Tesco, obviously, but much larger. And in Tesco, we started, as I mentioned earlier, in 50 stores. We're now in over 1,400. So we believe that's one of the most important things for us. And I think in the UK, further expansion into Superdrug was important for us.
I think also getting over 100 million of sales.
Yeah, getting over 100 million of sales that we're projected to do, which we're also very excited about. And just before COVID, there were 50 million. So we've doubled our sales in a few years. So we're delighted with that.
I think that's the end of the question.
I think that is the end of the questions. So if I could just thank you all for listening. And we'll update the market as we go along.
You have more than 10 question pages.
Oh, sorry.
1 second.
Top.
Apparently there's more.
Top corner.
Apologies.
Okay. What are the benefits of the IT listing? Apologies. So we thought it was the end of the ITC listing. Well, I think for us, we are getting a bit more traction in the US. There has been a bit more interest from US institutions. A few US institutions have bought in. So we thought it would be a good idea for retail buyers to have the opportunity to buy our shares in real time. So that's what we feel the benefit is. We didn't talk much about yes, it is still growing for us. I mean, you have to bear in mind this is a sort of a 20-minute presentation. You want to leave room for growth, but we are still growing within Tesco. We're getting more space and more stores all of the time. So yeah, it's still a growth story for us, very much so.
And also that sort of answers the question a little bit that was asked before. So Tesco is a retailer that sometimes we've got small units in.
And some big units, it varies. Yeah, so some stores we've just got our accessories. Some stores we've we'll have these great big cabinets, but there is plenty more room for growth, and those discussions are going on all of the time. And watch this space because there will be further announcement. Alex Donnelly, thank you for all your hard work. Alex, you're welcome.
I do believe
we do believe that is it now. So thank you very much for listening.
Thank you.